Hi and welcome, it's Steve Johnson here, Chief Investment Officer at Forager Funds, and today we're talking takeover bids in our Aussie fund with Senior Analyst Alex Shevelev. Hi Alex, how are you?
Hi Steve, hello everybody.
We've had a lot of takeovers recently. Today's the 13th of April and this is the biggest to date. Yesterday we got an announcement from Vistra Group, which is one of the largest holdings in our Australian fund, of a knockout bid from SS&C. Alex, can you give us the details?
So Mainstream has already been bid for earlier last month by a business called Vistra. The bid was a skinny premium and we were looking at it and thinking, look, there might be a little bit more to play with here in terms of the strategic nature of this business. We always knew that SS&C, the global behemoth as you say, had a potential interest in a business like this, or would have, and it was great to see them putting a bid on the table that was at a 67% premium to the prior bid, which itself was a significantly higher price than where the stock was trading.
Yeah, that's huge. That $2 price has added something like 5% to the net asset value of the Australian fund, so very significant. Look, SS&C, it's a $25 billion company and Mainstream's a few hundred million, so the size of the deal here is really chump change for SS&C.
That's right. I think the main aspect here is the ability to access Asia Pacific as a geography. So SS&C has other businesses around, but they've missed this core administrative function, and Mainstream has locked themselves into a lot of very large clients over a very long time frame, and it was an amazing asset for SS&C to be able to buy and plug into their global operations.
Yeah, watchers might have seen the name SS&C in the paper recently. They bid for Link, which is a much larger business than Mainstream. I don't know about you, Alex, but I was pretty happy to see the bid for Link fall over because it made a Mainstream deal more likely. There was also a little bit of commentary in the most recently SS&C quarterly that had us quite excited as well.
That's right. It's some commentary by the CEO and CFO around wanting to take on businesses that had organic growth, and it looked like they were thinking about doing simpler businesses as well. They also didn't quite deploy the amount of capital that they wanted to into acquisitions in 2020. It made this deal all the more likely because it ticked all of those boxes.
Yeah, Mainstream was an IPO back in 2015. We've owned this business for more than 5 years. That IPO was at 40 cents a share, so this $2 bid is a very successful outcome for us. What lessons have you taken out of the experience?
So there has been long periods in this business where the traded price was very different to the value of the business, and especially the value of the business in the hands of an acquirer like SS&C. Those values diverged quite dramatically. The business at times faltered with its delivery of profit, although continued growing revenue and continued adding clients. And that's where we were focused because that's where we thought the value was. The SS&C bid has come through and confirmed that was the key of the value proposition for an acquirer.
And our own involvement here in achieving this outcome, you and I visited them, what would that be, more than 12 months ago now, and said you need to do more here in terms of executing on this ultimate takeover play. Do you feel like that has helped the outcome?
Absolutely. I think sitting down with a management team and just saying, look, the market is a little bit confused about what's been happening here. They can see a growing revenue line, but not quite that drop through into profits. Let's clarify where we're going here. So a clear strategy, clearly communicated. And at the end of this process, once the market is comfortable with a business, let's run a process and put it into the hands of someone who's actually willing to pay a higher price than the traded markets ever would.
I think the management team has been as frustrated as us here with the lack of recognition of progress in the share price, and in some ways this Mainstream investment has followed the travails of the wider fund. It went through a very difficult period for a few years there, but the underlying progress was nowhere near as bad as the share price would have led you to have believed, and I think this $2 bid for the company is reflective of the fact that we've known for a long time that there's a lot of strategic value here. It won't be the last takeover that we receive in this Australian fund, and I think it's further evidence of things progressing much better than they were a few years ago and contributing to the performance. Thanks for tuning in.